Hello and welcome to today's Podcast Plus, where we bring you insight for best practice in bite-sized chunks. Today we bring you part 2 of our special feature on post-COVID financial controls for law firms, specifically the opportunities that are on the horizon. My name is Neil Partridge, I'm the Operations Director at PDA Legal and a Lexcel Assessor, and I'm joined again today by Paul McCluskey from Gemstone Legal, who is also a Lexcel Assessor and was the UK head of professional practices for one of the big four banks, now head of a specialist consultancy supporting law firms with financial controls and management. Paul, moving into part 2 of our podcast, and I would urge our listeners to listen to part 1 first to set the scene if they can. Let's go straight from the bottom. Let's look at the foundation. Which regulations do we need to keep at the forefront of our minds when we're looking at how we're going to seize opportunities within financial controls?
Thanks for having me back as well, Neil. Really appreciate you having me on again. So in terms of the regulation, the number one, the one that sticks out is the SRA Account Rule 6.1. And that's about you correct any breaches of the rules. So pretty much you need to look after client money. And if anything goes wrong, goes missing along the way, then the firm are duty bound to replace that money best way they possibly can. So that stands out for me. 2.4 on the accounts rules, talking about client money being available on demand. It's another one that banks need to work with their law firm customers to make sure they adhere to that. And then we've got Lexcel 2.5, and that's just talking about firms having appropriate procedures about handling financial transactions. So that includes the management of funds being received by the practice. That's the three that jump out for me. So Neil, I'll just talk to you about some of the challenges that arise from that. If you think that all banks are the same, or law firms that say to me, it doesn't matter, all banks are the same. To me, that's like saying all football teams are the same. And clearly we know that that's not the case. So some of the challenges that really can come out for me, first and foremost, your bank relationship. How do you manage that relationship with your bank? How does your bank keep you up to date, advised, keep you in line with the rules that we just spoke about? There's number one. Number two is client money. Do they help you manage client money? Do they maximize your interest and the income that comes back either for the firm and or the client? And how do they structure it? So there's a vast range really about how banks will structure your client funds. So there's that. And then there's finance and debt. So there's big opportunities really for firms to make the most of finance and debt. So that's three challenges that I think that are really there. And then of course, I'm sure you'll agree, it's making time to think is a difficult one for all firms. So lots to consider with regulations and challenges, but how do you actually give yourself that time to think?
It's about headspace sometimes, isn't it? It's about being able to review, to look back, and to seize the opportunity. It's interesting talking to, of course, the SRA wants us to reflect, wants us to ensure we've got appropriate controls. I always make the joke, Paul, that the next perfect law firm I visit will be the first, because there's always room to do things better. And we are talking about opportunities, aren't we, here? The SRA, Lexcel, they don't ask us to do reviews just for fun. I'm being a bit flippant there, but there's a very good reason for that. And I know, and I think you would agree as well, some of the firms that have done very well, not just in the current crisis, but generally very well, are the ones that are very comfortable or are used to standing back, getting into a helicopter, having a look from above and saying, okay, what can we do better? Are we looking at our risks? Are we reviewing where we are? And of course, financial controls and financial opportunity, which is what we're talking about here, it does exist at the moment, is where that leads from. So, okay, building on that, going from evaluating where you are and reviewing, let's talk about some top tips and what practices can do to try and obtain the opportunities that are out there. What have you got for us, Paul?
We said the last time, the very first one was cash is king, isn't it? So, regardless of how you get there, and I'll go into some top tips in just a second, but just remembering that cash is king and strong leadership within the practice are two huge things that firms need to do. But let's look at some top tips. First of all, round about business development. How many firms have large will banks but don't data mine that will bank? So they don't work through the wills. They don't know how many are live effectively. and then cross-sell from the opportunities that come out from that. So there is that. Cross-referencing old matters, files that have recently closed down, perhaps where there are opportunities with those particular clients. Do we keep in touch with those particular clients? SEO is a big one, the search engine optimization. Are their websites saying the correct things? Are the clients are searching for legal advice? Does the law firm's website jump out? You can find that out easily if you Google some of the areas that you deal in as a firm, see where your firm comes out in the ranking order. But then you move into some of the financial top tips. Better client deposit rates, which might not sound a lot when base rate is so low just now, and most banks have a rate as 0.01%. But you can get as much as 50 points, Neil, for overflow client funds. So to put that in perspective, that's if you were on 1 basis point and you dropped £5 million, sorry, you dropped £1 million into a bank, that's an extra £4,900 per £1 million you could potentially get from your top slice funds.
That's
So
really significant. That's a lot of money.
yeah, no, exactly. And and if you're lucky enough to have £5 or £6 million free, I guess, effectively free, top slice, then you can really start to make a difference with additional income. Whether the firm keeps it or you give it to your client is it's up to the firm, their own interest policy. But that money is available even in this low interest rate environment. In terms of charges, I would think that if you're a law firm, you've got a good relationship with your bank, you've got good credit balances with that bank, then you should be looking to renegotiate your charges wherever you possibly can. Now, that's a tough conversation with your relationship manager, perhaps, but charges sometimes are on bespoke pricing, so it is possible to renegotiate your charges. A perfect example of that is chaps payments. Some law firms don't pay anything for their chaps payments. Some law firms pay £30. Where are you in that spectrum? Now, the law firm might charge their client £30 for a banking administration fee, but if they're only paying £8 to their bank, then clearly there's a margin in there that sells. So renegotiate chaps fees is a big one. Then you move on to lending. I see a lot of firms that have an over reliance on their overdrafts. They're borrowing tax, they're taking professional indemnity insurance funding, everything, their disbursements, for example, as well, all through their overdrafts. Now, to me, an overdraft should be used for short-term funding. It's working capital. That's the whole purpose of it. It's short-lived. It can be recalled very, very quickly. And I would probably think that a law firm would damage their risk profile by consistently staying in an overdrawn position, which is called hardcore. So to me, a law firm should look to structure their debt, so professional indemnity insurance funding through asset finance, partners tax if they need to borrow it through an asset finance or a short-term loan. Strip it out from your overdraft as much as you can. On many occasions, borrowing it from a different source is cheaper than your overdraft anyway, and the firm will always give themselves the headroom in their overdrafts because they've taken funding outside of the overdraft for some of these things I've just mentioned. And at a time of COVID and reduced fee income and so on, pressures on cash flow, that's a real top tip that firms should think about. A couple of other things, Neil, I guess, refreshing your whip every 3 months. So, firms will go to their banks, they'll look for some funding. Banks will ask for their profit and loss and their balance sheets. How much has a firm tested their debtor figure and their work in progress figures that are there? Are their fee earners overstating it? And if they are, I guess it would be a good exercise to have an analysis on how much of that WIP and debtor figures is realistic. What can they really rely on? Because if you can't, then your cash flow projections are going to be wrong. You potentially are going to be undercapitalised from any funding that you look for, and apart from anything else, you're misstating the values on your balance sheets. So clearly that's not a good thing either. But certainly refreshing WIP to have a realistic idea of money that's going to come through is absolutely massive. And by doing that, I'll give you an example. If debtors and WIP together, what otherwise called lockup, managing that lockup, really, really important. If you were a law firm with a turnover of £5 million, if you could just encourage your fee earners to bill quicker, to collect cash quicker, take money on account, whatever it may be, if you can reduce the time scale it takes to gather in those fees, you could free up £100,000 through 1 week in reduction in your lockup days. That's £100,000.
That's a huge number, Paul. When I think of the sort of typical profile of a £5 million turnover law firm, in anybody's business, £100,000 is a lot of money. So that saving alone would pay a lot of business rates. It would certainly pay for an extra member of staff or so. And of course, it would, at the same time, it could also help to enrich profitability and indeed the lifeblood, the cash flow of the firm, couldn't it?
Or even paying down some of the capital accounts within the firm, taking some of the debt pressures off the business from other sources, just because you're thinking about doing your finances different. And my kind of stance on this is that finance is never about the money. It is not about money at all. It's about how you act and what you do with it. What are the policies, the processes, procedures in your business that help to generate and manage and look after the financial stability of the business. If you can do all of those, then you can sleep at night. What a great thing to just to take the financial pressures off the business, because if you're a law firm leader, you've got the livelihoods of all your staff to look after, you've got the clients to look after. So financial stability is a major concern, which is obviously why insurers are concerned about that just now. Some of these pressures happening at the beginning of next year, once the VAT time, it comes VAT, it's quiet through Christmas and so on. So firms have got an uphill struggle, but there's positive things that they can do through these top tips.
Well, Paul, I'm determined to ring every second of time I've got out of this with you for our listeners. Are there perhaps two more things perhaps you could set out for us?
Yeah, so two more really quickly. Firms should have a financial strategic plan, which has got staged reviews. So all of these top tips can be included within that financial strategic plan. Sit down with your law firm management team. Think about what are the things that you can do within your business and write the financial strategic plan. And if you don't know what to put in there, start with a financial benchmarking survey, go through your metrics. You'll know what you're doing well and what you're not doing well. That can help drive some of the activity within the plan. And also, bit of self-plug perhaps, my financial stability scorecard will also help you with that, because it pulls out the firm's attitude towards managing their finances within their business, and it will tell you exactly where you could be improving and what you're doing well.
Paul, that is terrific. We could do another one of these, and we still wouldn't cover everything. But there were some really valuable top tips there. So thank you very much. I think I would also emphasise to the listeners as well. Do go and listen to part one. This is part two. Look at part one as well, because although we are setting the scene in part one, Paul is also there giving some really salient examples of what we should be looking at. I would also mention as well, one of the last points that Paul picked up on was understanding the behaviours and characteristics of how financial controls are manifest and managed. And Paul has produced a financial stability scorecard. And if you want to track down Gemstone Legal, you'll have access to that. Paul, may I just say again, thank you very much for joining us for not one but two podcasts.
Pleasure. No, thank you.
Thank you very much. We have got a lot of resources available. You'll find if you go to the PDA Legal website, there is a host of podcasts on things like essentials for home working, as well as checklists like the one you see on the right here. And if you'd like to go to the PDA website, you can find out more. There are downloads there for you to look at. There's a sample of some of the podcasts we've got. And if you're interested about the Best Practice Group, please do start there. So once again, Paul, thank you very much, and thank you very much to our listeners. We look forward to presenting something new to you again very shortly.